Hey everyone, welcome back to our channel, Investo Time. Today, we're diving into a groundbreaking analysis from ChrisVermeulen on the future of gold and silver prices. If you're passionate about precious metals, you won't want to miss this. Let's break it down.
And then, of course, when we hit a bear market, financial reset, there's enough panic that margin calls, all kinds of things happen where gold pulled back, and eventually we'll see gold pull back. And then we're into this, what I'm waiting for it, everyone else in the precious metal space, is that next multi-year run where gold hits like, 3,000, 5,000, wherever it goes, silver back at 50, 80, 100, wherever. Miners go ballistic, like life-changing, bull market phase. Now we're not there yet. We still have a bit of a roller coaster ride to go through, but this is how it's most likely to unfold. And this is kind of what I'm waiting for. I hold a lot of physical. I have 0 miners. I won't be looking for miners until we start into this, until we've had a market correction. And then we'll, be in this exciting phase. So
gold has continued its impressive rally this year, hitting multiple all-time highs. December gold futures traded at $2,500.60, up $20.90 in early U.S. trading on Thursday. This surge occurred on a day filled with U.S. economic data releases, keeping investors alert. While gold has performed exceptionally well, the performance of junior gold mining stocks has been relatively muted. The VanEck Junior Gold Miners Index is up 20% year-to-date, only slightly outpacing the 17% gain in physical gold. This disparity has surprised market watchers, who expected stronger growth in mining stocks given the favorable price environment. Silver, gold's more volatile counterpart, has also joined the rally. ChrisVermeulen, a respected financial analyst specializing in precious metals, provides insights into the current market dynamics. He anticipates a significant multi-year run for gold, with potential prices ranging from $3,000 to $5,000, and envisions silver reaching $50 to $100 per ounce. Despite their current lag, mining stocks are expected to see substantial gains during this phase. However, Vermeulen cautions that the path may not be entirely smooth, warning of a potential major market correction or bear market, which could temporarily pull gold back to current levels or even as low as $2,000. His perspective is based on an analysis of market cycles, including what he describes as a supercycle for precious metals that began in 2019, reminiscent of a similar cycle that started in 2000. From a technical standpoint, December gold bulls currently hold a solid near-term advantage, with their next objective being to close above the contract high of $2,500.377. Meanwhile, bears aim to push prices below the key support level of $2,400. We'll share clips from ChrisVermeulen's interview shortly. But before we do, if you'd like more content like this, please hit the subscribe button and turn on the notification bell for updates. Thank you, and enjoy the video.
the problem when there's panic in the market, like in a stage 4 major market reset, there's usually enough fear. If there's enough fear in the market, almost everything sells off. People just literally sell everything. They're just like, they don't know what to do. When people are scared, they say no, they say get me out. It's just like natural reaction. And so when there's super high levels of fear, which we saw on that Monday, it pulled gold down. But when you look at it overall, I highlighted with this blue bar, that's the day. Gold pulled back just a little bit. I mean, it was a pretty big day for gold, but in the grand scheme of things, it's not enough to shake your core and shake you out of a trade. And it slowed down, over the next 2 days, and then it's right back up to those highs. So that's why gold is so nice that even when the worst case hits, it can hold its value really, really well. But my case is, if we go into a bear market, I do believe gold, silver, and miners will pull back with them. I think gold could rally to 2650 to 2750. That's what the charts, the short-term and long-term charts are pointing to. If we go into a stage 4 and a big market correction later this year or next year, whenever it happens, gold will probably get pulled back all the way back to where it is right now, maybe even back down to 2000, who knows? So it will get hit. And we've seen this before. The monthly chart of gold is a perfect example and shows you exactly kind of where we are in terms of these kind of super cycles at play, which is we started a new precious metal super cycle in 2019. We also started one back here in early 2000. Eventually it built up and got strong. We saw gold consolidate, have a multi-year pause. Well, we've got this multi-year pause right now. It's been consolidating. And then back in 2007, 2008, gold started to run. And that's because the world sees things slowing. They're becoming nervous. Smart money is moving into a defensive, slower moving asset to protect themselves. And that's exactly what we're seeing right now. And then, of course, when we hit a bear market, a financial reset, there's enough panic that margin calls, all kinds of things happen where gold pulled back, and eventually we'll see gold pull back. And then we're into this, what I'm waiting for it, everyone else in the precious metal space, is that next multi-year run where gold hits like, 3,000, 5,000, wherever it goes, silver back at 50, 80, 100, wherever, miners go ballistic, like life-changing, bull market phase. Now we're not there yet. We still have a bit of a roller coaster ride to go through, but this is how it's most likely to unfold. And this is kind of what I'm waiting for. I hold a lot of physical. I have 0 miners. I won't be looking for miners until we start into this, until we've had a market correction. And then we'll, be in this exciting phase. So that's where we are. Obviously, miners and silver will get hit much harder. Silver was down like 65%. Miners were down even more than that. So it really just, you pick your risk tolerance, but it's all about timing. The market still is, you need to identify the start of a new trend, make sure the stars have aligned for that particular asset, which is where this kind of circle is, which I'm hoping is next year at some point. And then, of course, you're off to the races with that kind of opportunity.
As gold continues its impressive performance in 2024, reaching a new record high of $2,483.35, market analysts are closely monitoring its next moves. Although gold has struggled to consistently break above $2,480, many experts remain hopeful that it will soon surpass the $2,500 mark. ChrisVermeulen advocates for gold as a top investment choice in the current economic climate, highlighting its steady global accumulation and lower volatility compared to mining stocks and silver. Gold's reputation as a safe haven during turbulent market conditions, with a reduced risk of sharp price drops, further enhances its appeal to investors seeking stability. However, gold's ascent hasn't been without challenges. Recent price gains were tempered as the US dollar and Treasury yields rose in response to stronger than expected economic data. This has led to discussions about potential changes to the Federal Reserve's interest rate cut plans, introducing an element of uncertainty into the gold market. Let's get back to the interview.
Gold has had a very strong chart pattern. It points to much higher pricing. We've seen it rally up, consolidate. It's rallied, it's consolidated. And of course, it's on its way higher. There hasn't been anything that has really caught us off guard in terms of something coming to life and really taking off. Bitcoin was looking primed and ready to break out. But once we had that panic selling, it pulled it right back down, which just goes to show that Bitcoin and cryptos are now like really tied into the stock market and the NASDAQ. If there's big selling in the NASDAQ, Bitcoin tends to sell off with it. But I like gold. Gold still looks like it's heading higher. It's super conservative. Out of all the plays right now, and I've been saying this for the last month and a half, is the best, highest probability play is just gold, physical gold, like GLD or buying physical gold versus miners or silver miners, simply because gold has low volatility. You can put your money in it. You're not going to wake up down 15%. It's seasonality wise, it's going to go into a strong phase here. We're in a market condition where gold generally does very well. In fact, if we were to take a look at the cycles of the market, we tend to see gold do very, very well just before a stock market top. Energy stocks have been trading near all-time highs, and industrial capital goods have been trading near all-time highs. All of these are telling us a few different things. Precious metals tells us the masses around the world are getting nervous of some type of recession or reset. Energy stocks, we're just really seeing people continue to spend money, and people are forecasting strong economy, and that's generally not usually that happens when everybody's bullish on energy and the economy is about to stall out. And so same with industrial capital goods. Everybody's upgrading their factories or assembly lines. They've had stellar couple years of sales, so they're planning for more growth. And when everybody's like super bullish and buying and upgrading their facilities, they tend to do it right at the worst possible time when we go into a recession, and they'll wish they'll have their old assembly plants that were lines that were already paid for and didn't have like millions in debt. So when everybody's really bullish, this is like these are three different types of sentiment indicators that are telling us We are close to a major market top, and gold is like my favorite play because the whole world slowly accumulates it. It doesn't move fast, so it doesn't have people panicking out of it like in miners and silver where they get moved 15, 20%, like, in a clip. All these things are coming together. Nothing has popped out of the norm for what we're seeing at this point. It's just things are unfolding as we anticipated. We're seeing like non-farm payrolls, unemployment start to rise, which is this yellow cycle. This is the economic cycle. So we're definitely like in these topping phases where the stock market is slowing. All the signs are there. The economy is slowing. It hasn't quite turned a corner yet in the United States. I mean, there's recessions in a lot of different countries, but it's coming. So it's going to be pretty interesting to see unfold, month after month. We inch our way there, I think.
While gold's immediate challenge is to consistently break above the $2,500 mark, many analysts, including ChrisVermeulen, view this as an achievable goal. The coming weeks and months will be crucial in determining whether gold can build on its strong 2024 performance and set new benchmarks in the precious metals market. Feel free to share your thoughts in the comments, subscribe, and hit the notification bell to join our community. Thank you for being a part of it.